Hey everybody, Alan Bramson here. Today we'll be talking about understanding your P&L, specifically talking about key performance indicators. Now, like always, you know that I own a bookkeeping firm and we provide bookkeeping and different analysis type functions. We handle all the routine bookkeeping and if you need payroll or accounts payable, but most of all, what we do for our clients is we are heavily invested on making sure that the analysis that goes with the financial reports is understood by the owner and that the owner has actionable information they can use to improve their business. If you have interest, please take a look in the description box below. There is a link where you can set up a free consultation call with me on Zoom. So if you think we might be helpful, I'd love to hear from you. So let's talk about key performance indicators, or referred to as KPIs. What are KPIs? Well, they're really just financial statistics. They're financial measures of your business. And you can break them up generally into these different categories. You have liquidity type ratios. For instance, a current ratio is one of the most significant. And a current ratio measures your ability to pay short-term obligations. You have leverage type ratios. And for instance, you might have a debt to income or perhaps a debt to equity, among others. And this one would measure the extent to which your company is financed by debt. You have a number of profit return type ratios, net profit before tax as a percentage of revenue, gross margin as a percentage of revenue. Sales ratios, you have a lead to proposal ratio, sales per customer. Production ratios, you might use an overhead as a percentage of gross revenue, perhaps revenue by employee, or field level compensation expense compared to revenue. So these are all ratios. There's almost an unlimited number of ways to measure your business. And so it's important for your bookkeeper or accountant to work with you to determine which of these would be most meaningful to your business. So the question is, what would your company do with these KPIs? Well, first, as I mentioned before, you determine which ones you'd like to track. And then what you do is you compare it to the industry or the norms of where these values are expected for a company like yours to register at. So for instance, if you take a current ratio or a gross profit, there's a certain level that for your company's size, for the type of business within the landscaping world that you typically service and what part of the country as well, there will be averages for other companies like yours. And then generally there are, for many of these ratios, levels at which experts will tell you are the appropriate level where you would want to reach, enable for your company to do well with bankers and to increase your chances of stability. Now, like all things, you have to look at what you're measuring, and if you don't do it in the right way, you might reach the wrong conclusion. On another presentation, I talked about you can look at a P&L and it might show that you're earning money, yet if you don't look at it by product, you might not know that some areas are making money hand over fist and others are losing significantly. Well, the same type of caveat with KPIs. One of the things that you would need to look at in addition to looking at these statistics at a point in time is you need to measure these for your business every month and compare it over time. Now you're wondering why? Well, let me show you two examples and it will become very clear. Well, let's use an example with current ratio, which I mentioned a moment ago. Current ratio is current assets divided by current liabilities. Let's just say that the industry standard is 1.3. So you want to be 1.3 or higher, okay? So take a look at this first slide. You'll see that the bar, which represents the actual value in June, shows a 1.2 reading. The line, which represents the target, is at 1.3. So you are lower than the level that you are targeting. You would think, okay, this is unfavorable, which it is. However, that's not the whole story. Now let's look at the next slide. This is the same information except if you had measured it from January through June. June's information is still 1.2 and you are still under the target. But when you look at it from this perspective, you see something very different. You see that there definitely was an even more significant liquidity issue earlier, but that every month this is getting better and better. And in another month or so, you're going to actually surpass, it appears, the target at this rate. So a very different perspective that you might not have seen. Now, let me give a different example. Let's look at gross profit as a percentage of revenue. Looking at the first slide, you can see that our target is 57%. So we want 57% or higher. And June shows 59%. Well, that's good, right? We're favorable. Well, let's look at the next slide. You can see that we're favorable, but that exact same information, if you had broadened the scope and had been tracking it for 6 months, shows that you definitely have a very significant problem in your business. You went from 69% gross profit and you've lost 10 points all the way down to 59 at this point. So yes, you're above the target. That's true. But when you look at it from this perspective, there's a lot more than meets the eye. The bottom line is that using key performance indicators, KPIs, is crucial. You have to have some way of A, comparing yourself to other businesses that are similar to you, so you can see whether you're lagging their results or whether you're better, or if you're different in some way and you need to investigate and see why. But the second is to compare you against yourself in the past and to look at this over a period of time, because then you factored out the differences between your company and others, and there are always going to be reasons why no other company is 100% comparable to yours. But by measuring your progress or deterioration over time is really important, as you can see. Now, as I mentioned before, this is the type of information that my company works on. We provide all bookkeeping type services, but we emphasize especially the analytical side. We don't just give you financials and move on. We give you financials that have the right level of detail. We measure things like KPIs and other things that you need to know, and we work with you so that you see issues when they're brewing, not after they've already caused a problem. Okay, well, thank you so much, and I look forward to talking to you guys next presentation.